Hey, this is Jeffrey Williams with Ingram Land and Realty. I'm excited to share my simple first-time home buyer's guide with you today. If you're a first-time home buyer, or maybe it's been a while since you bought a home, or maybe you had a bad experience the last time you purchased a home, then you have come to the right place. In this video, I'm going to describe the entire process of purchasing a home from start to finish. So let's get to it. Quick overview. This will be broken down into 5 parts. Number one will be applying for a mortgage. Unless you're paying for cash, with cash, you'll need to get financing from a lender. Number two will be making an offer and getting it accepted, which is basically coming to mutually agreeable terms with the seller. Number three, the escrow period. And escrow is a word that's used a lot in real estate dealings, so I'll explain that later on in the video. And number four, closing. So this is the point in time where you actually purchase the property and it becomes yours. And then we're going to break the mortgage payment down into its parts. This is something people have to pay generally from 15 to 30 years. So it's important to have a good understanding of how that works. And if you feel like you don't know a thing about the home purchasing process, that's okay. I'm going to try to clear that up in this video, and there are many people who are in the same boat. I do recommend having a knowledgeable real estate agent, hint hint, to help guide you through the process and eliminate any costly mistakes. So, let's start from the very beginning. And you may think the very beginning is going out and looking for homes. That would make sense, right? You may even be doing that now, and that's fine, but actually the most important step of the process is knowing whether you can buy a house at all or not. Many of my clients I've sold homes to initially believed they wouldn't qualify for financing, or either they didn't have enough money for a down payment, and in the end they got approved for more than they had imagined and got little to no down payment with a FHA or USDA or VA loan. Now, if you're paying for a home with cash, this part won't be as important for you, but the majority of people don't have a ton of money just sitting around, so um, I'd pay close attention to this part. You're going to need a lender or a financial partner, and that's somebody who is going to look at your qualifications and decide whether they're going to loan you money to purchase a home. So step one is apply for a mortgage. You're going to apply for a mortgage so that you can know for certain what houses you can afford. Generally, after the application, you'll get pre-approved to borrow a certain amount of money. And keep in mind, pre-approval isn't saying we're definitely going to give you money for this purchase. They will look at various factors such as your debt to income, which is your monthly debt payments divided by your monthly income, and that creates a ratio that they go by. They'll also look at your credit score, which is usually pulled from TransUnion or Equifax, and your payment history, which will affect your credit score. So make sure you're paying your bills on time and establishing some good credit. Uh, the lender, they're making an investment in you, so the higher your credit score and the lower your debt to income, the more likely they are to issue a loan out to you. However, if you're struggling on credit score or debt to income, don't count out buying a home. It's still a possibility for you. There are many lenders who will work with you to help you achieve your goal and give you a solid plan to get where you need to be. And I'll help you out as well if you're dealing with me. So to start the application process, you'll typically call a bank and arrange an appointment to meet with a loan officer. And many times you don't even have to step foot in the financial institution or bank, as most of the paperwork can be done electronically. I would recommend asking or consulting your realtor, who can provide a list of recommendations. And also, to be clear, pre-approval is not the same as an actual approval. So pretty much what they're saying is, it looks like to us at this point it's very likely that you could borrow this amount of money from us. And further down the road in the process, they're going to solidify that agreement. And if things have changed, such as a change in your income, or because you got a new job, or you lost your job, or you're making less money, it is possible for the pre-approval to not go through. And in my experience, pre-approvals usually turn into homeowners, so don't worry, just be aware of it. So in summary, a pre-approval is saying we think that we can loan you this money as long as the information is accurate and doesn't change. And many times when making an offer, the listing agent or seller will want you to issue them your pre-approval letter so that they know they're dealing with someone who can actually purchase the property before getting it tied up in a contract. I also want to address that typically your credit score will have influence over your interest rate. It's likely that a higher credit score will have a lower interest rate, and a lower credit score will result in a higher interest rate. So if you're at the very top and you have an 800 credit score, you'll probably have a better interest rate than someone who has, let's say, a 580 or 600. And many of my clients start out with no credit, but that's okay. It's not hard to start building credit and have a considerably good credit score within several months. Okay, so now that you've gotten pre-approved, it's time to go house hunting. This is the fun part. Through your pre-approval, you know what you can afford. So at this point, your focus should be on houses within that price range. You call up your realtor and let them know you're good to go and say, find me the house of my dreams. For example, that's when I, as a buyer's agent, would start making calls to schedule showings. We'd look at several homes, and if I was the agent, I'd present the market data, which pretty much I'd be looking for average days on market in the neighborhood, what property is comparable to the subject property sold for per square foot, that sort of thing. And that's important information when you're making an offer. You decide what you're willing to pay for the home, and now you make the offer. So your realtor helped you find the home of your dreams and you made an offer. This means you put in writing the amount of money you want to buy the house for and included any contingencies or additional expectations connected with your offer. Now, an offer is simply putting in writing the money you want to offer to buy the house. You can also add the contingencies to the contract, which are basically factors that would have to be addressed before purchasing the home. An example of a contingency might be a satisfactory home inspection. Maybe it needs to meet appraisal, a certain dollar amount the seller must pay for repairs, or a good wood infestation report. Or maybe you want all the household furnishings. Basically, contingencies may be asking for things that aren't generally included in the sale. So the offer is made. At this point, the seller can do one of three things. They can accept the offer. This means that the terms were satisfactory to them and they want to move forward to close the deal. Number two, they counter the offer. This means that they weren't in total agreement with the terms presented, but they're hoping to come to an agreement. Most commonly, offers are countered, and you kind of go back and forth in negotiations until you can both reach a point of satisfaction. Or three, they decline the offer. And this is less common, however, it does happen. A seller might feel that you lowballed them. Let's say their house was listed at $200,000, and they feel that it's worth that, and you offered them $100,000 for the house. They might feel offended that you would think their house is only worth that amount. So if the offer is countered, you might decide that you will accept that offer, or they accept the offer initially. Anyway, once the offer is accepted and all parties have signed the contract, your home is no longer for sale. It is now pending or under contract. So at this point, you've figured out what the purchase price will be. The contingencies are in place, such as what repairs, if any, need to be made, that sort of thing. Now we move into the escrow period. And this is the period of time between an accepted offer and the closing. So the closing is the actual moment you purchase the home from the seller, but in order to get there, we have to get through the escrow period. So let's talk about what happens during the escrow period. To start with, the mortgage that you got pre-approved for has to be secured. Most of the time there's a home inspection, and I highly recommend having a home inspection done. I personally would not buy a property unless I had it inspected by a qualified home inspector. And most of the time, the lender will require that, or the financial institution issuing the mortgage. Pretty much the home inspector will thoroughly look for any deficiencies in the home. This could be structural, could be the condition of the property. They'll do a detailed report on that. And going back to the contingencies, if your contract stated specific contingencies, we need to make sure that's actually done before closing. So the next thing after we've secured the mortgage, the home inspection has been done, the contingencies are addressed, you'll need to get insurance for the property. And speaking with a knowledgeable insurance agent will help you a lot, and I'd recommend getting several quotes. All right, so let's get into securing the mortgage. To secure the mortgage, your agent will send over a copy of the accepted contract or purchase agreement to the lender. This lets them know that there's been an accepted offer and they can see the purchase price and other terms. So they'll want to verify your finances. They will want income documents. They want all your W-2s, your 1099s, your pay stubs, whatever you have that pertains to income. The reason they need these documents is because they want to be certain you have the income to make your mortgage payment. And once the documents have all been verified and they meet the standards, your mortgage will be secured. Typically, the lender will issue a home inspector, and I talked about that a little bit earlier. They're going to look at the structural integrity of the home, all conditions of the home, make sure everything's in good working order and there's no major flaws or anything that's going to come up down the road and cause a problem. And if you've never seen one of these reports before, they can be alarming when you first look at it because they report all of their findings, and no property is going to be flawless. So expect to see some findings on those reports. I'd be very surprised if it was just a blank sheet of paper saying, hey, everything looks good. So you made that offer with the idea in mind that you were buying a sound home with no large issues that could be costly, and this is why the home inspection contingency is so common. And you may already be aware of some issues with the property. Either you saw them firsthand or your realtor pointed them out before, but this is a more official report. And a separate individual, I didn't make a slide about this, but a separate individual will do a wood infestation report. So they're going to look for things such as termites or powder post beetles or any wood decaying creatures or fungus. So if the contingency for a satisfactory home inspection or wood infestation report is not met, the buyer might decide the house isn't worth paying for all the treatments, or the seller may pay it. Buyer might decide they want to pay it, and it's not a big deal. That's why I advise putting a specific amount to be paid for repairs. In the purchase agreement, typically it's written out as seller to pay X amount of dollars or not to exceed X amount of dollars for repairs. And that'll be the contingencies. And so all the contingencies will be addressed, and keep in mind if the home inspection or wood infestation report have any issues, there may be additional negotiations. And we will also have to get insurance. Homeowner's insurance policy aims to protect you, the buyer, as well as the lender. If the home is damaged or destroyed, you'll be covered. So you want to get a home insurance quote. The lender will use this in calculating your monthly mortgage payment. So if the home were to burn down or a tornado blows off the roof, you'll be covered by that insurance policy. And the mortgage company will want you to have that insurance policy prior to closing. So you'll contact an insurance agent and they'll ask you questions and see how much risk it is for them to insure that home and give you a quote. And like I said, I'd recommend getting several quotes so that you know you're getting a fair rate on your insurance policy. So once you've found an agreeable quote, you pass that along to the lender, who will figure that amount into your mortgage payment. So prior to closing, you must secure the insurance, and you will receive a certificate verifying the insurance that will be given to the lender in order for the closing to happen. And the lending institution or financial institution will typically require two things to close, and that's insurance so that their financial interest is protected, and the second would be the cost of that insurance to factor into your monthly payment. So in summary, your mortgage has to have insurance. And at this point, we've gotten the home inspection, the wood infestation report, the contingencies have been met, and you've got your insurance taken care of. So typically during the escrow period, a closing date will be set, and depending on how smoothly everything goes, you will close on that date and time. However, the date may be delayed if there are issues that occur during the escrow period. So at some point, when everything's taken care of, it's time for closing. The moment we've all been waiting for. And for most of my closings, they're done at an attorney's office, sometimes a title company, but in the Wiregrass and surrounding areas, they are mostly done at a closing attorney's office. Here, the buyer and seller will arrive and they'll sign all the documents required for the transfer of the property's ownership. So more specifically, the closing could be described as a point where the seller no longer has any interest in the property and ownership is transferred to the buyer. And one term you should be familiar with is closing costs. Closing costs include fees such as the closing attorney, what they charge to do the title work and pay and close the deal. Your lender will have fees. They'll have origination fees, paperwork fees. They might charge a credit report fee, and the realtor fees will have to be paid. And to touch on the realtor fees a little more, typically the seller pays the commission for both the listing agent and the buyer's agent. So, for example, if XYZ Realty lists a property and I'm representing you as your buyer's agency, they offered the listing agent 6% or 5% or 8% to sell the property, and then that listing agent is going to split that commission in some way, shape, or form with the agent who procures a buyer. So it's not a direct cost to you, so I would take advantage of the opportunity to have a buyer's agent, and if you're in my area, give me a call. And after you've done that, you'll pay 1 year of your homeowner's insurance unless you've already paid that. So there are other fees that come with it, but before closing, you should receive a disclosure from your lender stating how much money you will need to bring to the closing, and typically that's in the form of a cashier's check. So the money is definitely there, and they don't get a personal check that might come back, or the funds might not be there. Cashier's check will ensure that the funds are there. And hopefully your agent was able to get the seller to pay for most of the closing costs. So at this point, you got pre-approved, you found the house you wanted, you made the offer, you got an accepted offer, your financing got approved, the property passed all inspections, all the contingencies were met, and you closed. Congratulations, now you are officially a homeowner. And it's time to move. So, as always, I'm here to help you, your family, and your friends. I work all throughout the Wiregrass area, and I'd be honored to work with you as your buyer's agent to find you your dream home and help you navigate through the process from pre-approval to close. You can email me or contact me through my website. I hope you enjoyed the video, and I hope you learned more about the home purchasing process, and thank you for watching.